Thank you so much for joining in and giving us your time. I want to start off by using a few of the things that you've written on the note and start off with the first one, wherein you're making this point at the very initial part of your letter. Then stocks can have extended periods of sub-fixed income instrument returns, and in some cases, negative returns as well. Rajiv, why is this such an important point to be made at this juncture of the markets?
Sure, Neeraj. So, friends, relatives, people who we know, of late there has been this chatter. So, just this Diwali season, we were meeting various friends and relatives. So, someone came up to me and said, I have this money which we have kept aside for buying a home, and markets are doing good. So, where do I put it? Meaning, I may need it in 6 months, I may need it in 8 months, but show me a way where I can make good returns, and banks will give me whatever 7.5% per annum. Stock markets will give that in maybe a few months. So why wait in fixed income instruments? So this uh, past returns have changed behavior of investors. Investors are now taking it for granted that for any time horizon you can come to equities and you can make positive returns. I think that is something which is, to my mind, a worrying sign, and people should consider that equity as an asset class is only meant for longer term investments.
Yeah, and I think there is a very nice view that therefore comes in when Rajiv speaks about this. And again, I'll use that quote which I've picked up from the note itself, wherein he's saying that only put that money into equities that investors can preferably not touch for a decade or at least 5 years at the minimum. Now, Rajiv, that's a very long time frame for people who have come into the markets in the last 4 years and have seen decades compressed into months or quarters, if you will. 5 years and 10 years seems almost impossible to a lot of investors currently.
Yes, Neeraj. So this is the dichotomy. People buy a home and will live in that for their entire lives, or will pass it generation to generation. People will buy gold jewelry and that will be in the lockers and again get passed on to the next gen. People will put money in EPFO, start at 25 years of age and uh, keep investing till they are 60. People will pay life insurance premiums for decades. But equity as an asset class, which technically has no maturity date. So unlike bonds, which have a fixed maturity and they have to pay back principal at a certain point in time, equity have no such thing. Still, people have the shortest patience and shortest time horizon for equity, which I think, as you said, years and decades have been compressed into days and months in the recent past. I think that has changed investor behavior, and I think it will not end well for people who are looking for a quick buck from the market.